Yeah, so I don't know that better's the right word. I think we just prefer it, right?
Yeah,
As a
preference.
method
Yeah.
of doing a business, we want to help more people get into the space, and the goal is, for people to come into our deals, learn as much as they can, and then if they want to go off and do their own thing, they're well equipped to go do that. If they want to stay and invest with us because their experience is excellent, then we love to have them. But the goal isn't to keep people captive to our investment platform or our investment opportunities. We want people to be able to go off and, if they have that ambition and ability to be deal leads, to go be deal leads. And we don't see you to be able to, we don't feel like you're able to make that transition as an LP versus being a JV partner. Or, if you don't sign a loan, you don't have experience. That's just kind of the way this name of the game. And so the more people that we can get into our ecosystem that can sponsor deals and lead deals, I think the better off we are.
Welcome to the Wealth Through Real Estate Investing Podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth of Real Estate Investing Podcast. This is your host, Dwaine Clarke. And today we have Jerome Myers. Jerome is the managing director of the Myers Development Group. The company offers private lending, business strategy, organizational development, and engineering consulting services to businesses and individuals in Virginia and North Carolina. Jerome, how are you doing, my friend? And thanks for joining us on the show.
Hey, Dwaine, great to be here. Super appreciative that you guys extended an invite for me to come over and share with you today.
Yeah, I really appreciate it. We talked a little bit pre-show, just kind of like, what you do, a little bit about your background. Very impressive. And also heard you on a couple other podcasts. Just wanted to kind of get a different perspective. We mentioned through Wealth Through Real Estate, we just want to offer as many different facets of real estate investors and different stories because we have different types of, needs and wants through, listener base. So we're very appreciative and honored to have you on. But before we kick things off, if you don't mind, take some time to talk about your background. How did you get started in real estate and what's your current focus?
Yeah, man. Again, thank you for the opportunity to share with your listeners. So at the deepest level, I'm the son of a soldier and a stay-at-home mother. I grew up in the same household, believe it or not. Got to live there for 18 years after we moved out of a trailer park. My parents built their first home, and I was there until I left and went to college. I went to North Carolina Agricultural and Technical State University, got a civil engineering degree, left from there and did structural engineering for a power company for a few years, got on a leadership track, went off into consulting, and then my last job was building a $20 million division for a construction company. And in that, we were handling everything from securing real estate rights to actually putting the power lines in the ground. I left corporate America following that opportunity because I just got tired of laying people off around the holidays and had to do it 2 years in a row, and it just did not sit well with me. And in fact, this time of year is probably more sad for me than with most people, even though I'm surrounded by a lot of people who deeply care about me and are excited about life. I just haven't moved past kind of the trauma of saying, or that Christmas Eve conversation I had with my manager where he told me, Jerome, we're going to lay him off. You need to pick who stays, and then we're going to move on. That was 5:00 on Christmas Eve one year, and that just wasn't the gift that I wanted. We've done a lot. So when I walked out of corporate America, I thought I was going to walk into buying apartments. My friend Duran and I were sitting on a stoop in college, and we started counting it up. He's like, I pay $400. My other two roommates pay $400. You pay $400. Everybody pays $400 for the room. So that's about $1,200 a unit, and there's X amount of units in this complex. This guy's pulling down about $700,000 a year. And we didn't know who the guy was or the gal. We just knew that the person owned the property, didn't show up and do any maintenance calls, didn't take any of our checks, didn't do anything, but the money was coming in, and then he was able to live a life where he didn't actually have to be on site. And I went back to that route when I walked out of corporate America. I said, how do I get back to that thing I said I wanted to do, 15 years prior? And I walked into the bank after finding a deal that I wanted to do on LoopNet, and they said, yeah, you don't have the experience to do that. I was like, I just built a $20 million business. They're like, yeah, but that has nothing to do with apartments. And so after spending, 4 or 5 weeks trying to get somebody to finance the deal, I walked away and went into fix and flip. And so I fixed and flipped a few houses, and I don't know if it was destiny or some divine order, but one of the fellow investors pulled up to my flip house one day while I was standing on the porch, and he's like, hey man, let me come in and check out what you guys are doing in here. We've got a house down the road and we need some ideas for what we're going to do. As he's walking around and looking at the stuff that we have going on, he's like, hey, do you know anything about this building in Church Hill? And this is in the suburbs of Richmond, Virginia. And I was like, yeah, I tried to buy that a few months ago. He's like, well, I'm getting ready to put an offer in on it. I'm like, God, please, like, don't leave me out. Bring me in on the deal with you. And he went in, he made an offer. It was unsuccessful. And then he came back and he was like, look, I got to put a team together. I made the offer. They didn't accept it. And I got pulled into my first deal. And I don't know what I would have done had I not been standing on the porch that day, because I'd kind of given up on that opportunity, that dream of being an apartment owner since, I had some money in the bank. I had a credit score, but I wasn't able to get the loan financed on my own. And so that team had everything. We had a property manager, the actual broker who sold us the deal joined the team. We had a contractor on the team. I was brought in for project management. And then this guy actually had the experience as an apartment owner. So he was able to write the contract and get us in the due diligence phase. And then we kind of took over from there. And so we've done a number of transactions. I'm the asset manager for all the deals that I'm in. And, we've been the deal lead or contract writer for all of them except for that first one.
Yeah, I like that background. Kind of have some similar synergies, but when I got into the fix and flip, kind of raw, just learning everything, and then found an experienced investor who had, I had some, decent educational background like yourself, and then he's able to pull me in, and I was able to kind of contribute, learn more about the business, but able to get into some larger asset classes there. Was that deal in, was it Virginia or North Carolina?
The first one was in Richmond, Virginia.
Okay, so can you talk about a little bit that marketplace? I've been learning a little bit more, talking to more investors in that place. What's the characteristics that you like, and where you see it, moving forward in the future?
Yeah, that market is pretty cool. We were able to buy that deal for like $56,000 a door. It was a 23 unit. It was in really rough shape, but on the backside of that deal, we've been able to raise rents from $695 to $1,195. We did a full transition on the property. So we added a half bath on the first floor. We put in a laundry room with all new appliances, granite countertops, painted the whole thing, tile in the upstairs bathroom. We changed out the doors. We did a total retrofit of the whole property. On the outside, we did roofs, siding, parking lots, landscaping. We just kind of took the thing and took it from, I guess it was 1979 or so, up to 2019 standards. As far as the marketplace, Richmond's really tight. It's back when I think Capital One relocated their headquarters from up north. I don't know if it's Jersey or New York, but they came down to Richmond. It's kind of been a hotbed. So it's a whole lot cheaper than Washington, D.C. It's kind of in this, it's got a really stable economy because of the ties to government. I think there's like 7 or 8 different Fortune 500s headquartered there. So, high income jobs are there. The city is gentrifying in some areas. So some of the places where it was historically wealthy, they moved out into the suburbs and now they're moving back in. And it's pretty cool to see the face of neighborhoods change. You're seeing poverty get moved around the city. And I'm not opposed to that because there's opportunity to generate wealth and there's also opportunity to reduce crime. And you're seeing new people make investments in anticipation of things like a new Coliseum happening or, a new Fortune 5 coming into town. So, I really enjoyed Richmond the time I was there, but I decided that the cost basis in Greensboro, North Carolina was a better opportunity compared to what I was seeing in Richmond. And so in 2016, we picked up and relocated down here to invest full time.
Yeah, I really like the Greensboro area. Got a lot of investors in that marketplace. It's growing. The jobs, job diversity, income, all of the economics looks good for investment property. Is that kind of the future goal there? Is to continue in that area market, and or is there any other marketplaces that you guys are looking to do later in the future?
No, we're 100% focused on Greensboro. We want to be the market maker in this market. And so, we've tested, bought a few properties around town, see how they reacted to our value add plans. And now we're ready to make a big plump. So we just finished rezoning 6 acres of land, and we're going to do a ground up development with about 115, 116 units.
Mm. You had mentioned pre-call that we're talking about like the difference between JV and kind of a limited partner. Can you kind of talk about your thoughts on why do you think a JV is better than kind of limited partner side, and how did it help in your development?
Yeah, so I don't know that better is the right word. I think we just prefer it, right?
Yeah,
As a
preference.
method
Yeah.
of doing a business, we want to help more people get into the space, and the goal is, for people to come into our deals, learn as much as they can. And then if they want to go off and do their own thing, they're well equipped to go do that. If they want to stay and invest with us because their experience is excellent, then we love to have them. But the goal isn't to keep people captive to our investment platform or our investment opportunities. We want people to be able to go off, and if they have that ambition and ability to be deal leads, to go be deal leads. And we don't see you to be able to, we don't feel like you're able to make that transition as an LP versus being a JV partner. Or, if you don't sign a loan, you don't have experience. That's just kind of the way this name of the game. And so the more people that we can get into our ecosystem that can sponsor deals and lead deals, I think the better off we are.
How do you think for people that wants to come in and kind of do what you do, make that transition, there's any things that you did along the way that you maybe do differently that you advise people now to say this is how you can kind of quickly get into the business, learn, and then be able to kind of help build wealth for you in the future?
Yeah, it's kind of self-serving, but I think the most important thing you can do to speed up that path is to get a coach. Like, that's the one thing that I know I would do different if I had to do it all over again. I probably have reduced what I could have done in this amount of time by a third or 2/3. I'm probably only a third of the way where I would have been had I actually invested in a coach and got my my multifamily investing jump started. Everything I did was, YouTube U, Podcast University, and there's so much scattered content out there. And if you're not careful, you can get lost in the sauce. And I've been consuming maybe 40 hours of content each week between books and podcasts and videos and whatever else, conferences, whatever you can think of. And I've went through a lot of stuff that I probably didn't need to go through in order to be successful at what I'm doing. But that's given me a pretty broad exposure to real estate investing, and then really diving deep and having somebody curate that content for me, somebody who's actually looked through it and said, this is relevant, this isn't relevant, I think really accelerates that. And so, if I'm listening to 40 hours of content and really all that's useful is 10 hours, well, if I could do those 10 hours in the same week 4 times, then, I basically save myself a month each time that I do that.
And then plus, to your credit though, like I said, you took it from that approach, was able to get just a lot of exposure, a lot of experience. And then now I kind of reading more about your background, that you like to help people as far as kind of coaching your podcast and just trying to give out that information to help people kind of, find their direction out there. Can you kind of talk about what you do to help others to kind of get into the business? I know, like I said, from the podcast, or any other platforms that you help to provide other future investors?
Yeah, I mean, so the DreamCatchers podcast tells us stories of ordinary people doing extraordinary thing. And that is, I guess, is core to who I am, right? So while I want to be really good at stuff, like, I don't only want to know how to do one thing. And so we're really broad with DreamCatchers. We have people from all different backgrounds sharing their stories, and the general theme or the unifying theme for all of it is dreams should be real. So, it's my belief that anything that you dream of can be reality. You just have to be willing to pay the price. And so what we're looking for is those success tools, techniques, and I don't even want to call it hacks because it's probably overused, but we're looking for kind of the shortcut or things that will help us get to that place a little bit quicker. And so on a weekly basis, we bring people onto the show and we share their story. And we don't just do like the surface stuff. We actually want to get to know people. We want to know about their defining moments. And, you know, we still, one of the questions you use, which is what are you most grateful for? Because we feel like everything comes from gratitude. And then if you can radiate from the gratitude, you know, you can impact and influence the whole world or a whole nation, depending on, you know, what your reach is. So, you know, DreamCatchers is one of those things. Other thing that we do is we started out with Myers methods. And one of my key principals who's invested in every deal that I've done, he coined the term, and it's like, you know, you've got a really solid process here, Jerome. We need to make people aware of how we do it. And so Myers methods is rooted in find it, fund it, fix it, flip it. And we do each one of those steps each time we go through the process. And every other syndicator or multifamily investor does the same thing, but we've kind of tailored it and adjusted to pick up all of the lessons that we've learned from podcasts and YouTube videos and our personal experience and stories that we've heard anecdotally. And in that, you know, we systematize it. And so we started this virtual class that we're doing, and it's running for the next 4 months. And then because everybody likes to have things on demand, there'll be a class where you can actually just, you know, sign up, pay for the course, and go through the videos and do the different homework assignments. And so it'll be totally hands off, and people can consume it at their leisure. And so that will come out in the first quarter of this year, but the actual hands-on, everybody touch face-to-face with me and some of my other multifamily investing friends is happening right now. And we're super excited about that because we see one of the things we want to do is change the face of wealth. And so, you know, if it's the 50-year-old person with gray hair and, you know, a starched shirt, we don't think that's the face of wealth anymore. We think people are generating wealth, and, you know, it doesn't matter what your color is. It doesn't matter if you like a t-shirt or a suit. All of those things fit into the bucket of wealth, and we want to actually perpetuate that. We want to break all those stereotypes.
Yeah, I like that a lot. And I seen that some of your other previous guest appearances, you had the shirt. I took the red pill. It's kind of like that, you know, that whole mindset change is like, not, it doesn't be the typical person that's going to be building wealth, but, you know, everyone that's going to take that pill, get educated, you know, get connected to the right information, a network, supportive network, and can be able to transition their life and, you know, change their whole life and their livelihood. Where, as far as kind of like, where do you see the business taking off in 5 years? I know you said you want to concentrate on the Greensboro, you know, maybe expand out into North Carolina, other markets in North Carolina. But is there any other asset classes you want to stick in multifamily? Is there other things that you're looking to do?
No, we're going to be the expert on workforce housing. You know, multifamily is the game for us. And we believe that, you know, I don't want to call it inflation proof or not inflation proof, but recession proof. But the fact of the matter is you can't outsource housing, right? And we're not doing trendy stuff like Airbnb where, you know, people are traveling and you're relying on them traveling in order to get your income. Like, people actually need a place to sleep every night. Whether they're traveling or not, they still need that place. And it might not be, you know, maximize profit, but the fact of the matter is it's a staple, it's necessary, and there's a shortage across the country. And so if we're able to master that and, you know, through our classes and through our one-on-one coaching programs, we'll be pulled into other markets just because there are people who want to invest in their own backyard. And we feel like we can help them do that successfully because, you know, the process doesn't change regardless of the market. Now, we do need to make sure that the market is solid, that they're investing in. But after that, the process is exactly the same. And so we can apply it across many different markets. But as far as me and what I'm looking for, you know, we're going to invest in Greensboro pretty heavily, and not just Greensboro. So we're an hour from Charlotte, an hour from Raleigh. And so anything in that 40-85 corridor, we're interested in taking a look at.
Yeah, I like that a lot. kind of take us through like a typical day for you. I know you're doing the coaching, you got your projects, you know, expanding the business and the platform. You kind of tell, do you have any special morning routines, and what's like a typical day for you?
Yeah, Dwaine, I love that question because I feel like I do something nobody else does. So I get up between 4 and 5 every morning, and I go for a 6 mile walk. And
Mm,
part of that's in silence. Part of that is listening to something motivational, and then the last piece of it is education. And it's a combination of podcasts and books. And so I get up, do that, and when I get back, I feel like I've primed myself for success for that day. And this rain, it's sleet, it's snow, it's sunny, it's cold, it's hot. Regardless of what the environment is, I'm going to go do that. When I get back, I check it off and say, I've done at least one thing right today. So even if I mess everything else up, I can hang my hat on the fact that I did one thing right. From there, we get into some type of water consumption, and then we probably mix that with some type of like smoothie or shake or something, get the energy up. And then we get into the day, and it could be anything. Like, for instance, today I was working on some of the homework assignments for our Myers Methods investing class. And so what does that look like? Templating it out, making assignments or delegating things that I don't necessarily need to do and other folks can do. And then from there, we spend some time looking for deals or evaluating the deals that we already have. And so one of the things I do is I get an email every day that gives me all of the changes on the different accounting sections of our financial sheet. So if we had income come in, I get to see that. If we had expenses go out, I get to see that. And that's for all of our properties across the whole portfolio. If there's questions about that, we deal with that. Pretty regularly, we were being interviewed for some type of podcast or something else. And so you mix one of those in either late morning or early afternoon. We try to spend lunch with people who are going to further our mission. And so, and I think you asked in some way, shape, or form, like, where are we going? And the goal is 1,000 doors, right? So by 2028, we're moving to 1,000 doors, and we'll probably do that much sooner, but that's kind of the bandwidth: 1,000 doors, 100 partners over the course of 10 years. And so everything is driving towards that. If it's not helping us get to 1,000 doors, then we don't do it. And that's kind of the long and the short of it.
Yeah, I like that a lot. Yeah, I appreciate you sharing that. And we have talked a little bit about that everything is kind of built in gratitude, and, if we kind of structure a life like that, giving out, helping, even just doing this podcast, people's going to hear this and be inspired or pick up some type of tip or strategy and able to kind of change their course of life. But can you tell me what in particular that stands out for you that you're most grateful for?
Yeah, the people around me who are interested in seeing me be successful. Like, I've been in a place where I didn't think anybody cared whether or not I succeeded or not. And being in this place is so much better. When you're full, when you have abundance, there's a lot of people who line up to take from that abundance. They don't actually care whether they sow back into it. And get in my life aligned with people who want to have mutually beneficial relationships has been the biggest difference maker in my world.
Yeah, very well said. I really appreciate that. So you have the Myers educational platform, your podcast. Can you give us some contact information, how we get in touch with you?
Yeah, so the best way to connect is with LinkedIn. And so I'm the only Jerome Myers in Greensboro, North Carolina. My last name's spelled Myers. And so you can just do a quick search for me on LinkedIn. If you want to learn more about Myers Development Group, the website's developing, D3V3LOPING.com. I wasn't the first one to get regular developing, so I had to be creative and use those threes instead of V's. And then, for your listeners, as a free giveaway, they can go to, I'll have to send you the link if I haven't sent it to you already, but they can go to myersmethods.com/free class, and they can see our free half of our funded Find It, Fund It, Fix It, Flip It multifamily investing class. I'll shoot you the link for that. And this is the first time I actually gave it out, but I think it's a really solid class.
Yeah, I really appreciate that. We'll make sure to put that in the show notes, send it out in our newsletter, make sure everyone's aware of it so they can contact you. Like I said, just kind of get started, talk with you, have a conversation with you, and just, learn more about their path and where they're looking to go. Jerome, like I said, it was a pleasure speaking with you. We had a good, pre-call, kind of getting to know each other, and I look forward to, learning more about you, seeing the growth in your company, and look forward to connect with you again soon.
Great, Dwaine. Thank you.
All right. Thank you, brother. Great. Take care.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing Podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.